Welcome, everyone. Today, we're exploring a fascinating shift in property investment. How real estate crowdfunding and fractional ownership are opening doors for more investors than ever before. Whether you're a seasoned investor or just getting started, this video will help you understand how these innovative methods are reshaping real estate. Let's get started. Here's what we'll cover in this video. We'll start with an introduction to crowdfunding itself. Then, we'll see how real estate investing has evolved, especially with the rise of technology. Next, we'll break down exactly how crowdfunding platforms work and look at the mechanics of fractional ownership. We'll also weigh the risks and benefits, and finally, glance at the trends shaping the future of this space. So, grab a notepad if you want to jot down insights. Let's jump in. Let's set the stage. Real estate crowdfunding is revolutionizing how people invest in property. By pooling resources online, groups of investors can participate in deals they'd never access on their own. This isn't just about lowering the price of entry. It's about giving everyone more flexibility and direct choices. Technology makes the process smooth and transparent, so building a diverse investment portfolio is more straightforward and accessible than ever before. Essentially, these platforms let you invest in real estate just like you'd buy stock in a company. Imagine a digital marketplace where property sponsors, eager investors, and prime real estate come together. Crowdfunding platforms build trust by being open about every step: acquisition, management, and payouts. Automation simplifies the process, from vetting new opportunities to signing contracts and even handling ongoing reports. Data analytics isn't just a buzzword here. Platforms crunch numbers to assess market trends and ensure only credible projects make the cut. The result? A streamlined, informed experience that empowers investors at every level. Fractional investing is shaking things up. Now, you don't need a fortune to get started. These new platforms mean more people can buy a piece of a property, not the whole thing. By making access easier and the minimum investment much lower, we're seeing a more diverse mix of investors coming in. In fact, global platforms are even reshaping the way people think about property investment altogether. Traditionally, real estate deals required solo owners or large groups with steep minimum investments, making it tough for everyday investors to break in. Enter fractional ownership. Now, a property is sliced into shares that anyone can purchase. This approach lowers both the money you need upfront and the risk you take on, since you can spread your investments across multiple properties. Thanks to digital innovation, selling your shares is now as easy as logging into your dashboard, giving you flexibility that just wasn't possible before. Let's pull back the curtain on these platforms. Investors get access to a managed marketplace, set their own investment amounts, and watch their portfolio grow, all with reduced entry barriers. Sponsors, on the other hand, list different vetted projects, handle legal compliance, and keep the communication flowing. Their experience is key. The dashboard is your command center. See project updates, financial performance, and educational resources, all in one place. These platforms bridge the gap between opportunity and investor, building trust on both sides. So, what keeps all these moving parts running smoothly? Integrated funding solutions streamline onboarding, from picking a project to eventually cashing out. Security is vital. These platforms use tough encryption, conduct compliance checks, and actively guard against fraud. Platforms offer support, too, legal, technical, or tax-related, so investors and sponsors can focus on success. The more streamlined operations get, the better the experience and the greater the value for everyone involved. Fractional ownership rests on three key pillars. Transparency. Every investor's share is legally recognized and carefully tracked by the platform, ensuring compliance and clear reporting. Liquidity. Unlike traditional real estate, these shares can often be resold or transferred, letting you rebalance your portfolio as needed. Diversity. With lower minimums, investors can buy into multiple properties and markets, broadening their exposure and lowering risk. How does this all play out for the investor? First, you choose which kind of property you want and for how long you'd like to invest. Legal agreements clarify exactly how ownership works, including how returns are paid for each share. If you ever want to exit, many platforms have secondary markets to help transfer or sell your shares. Flexibility, security, and clarity. Those are the hallmarks of the fractional ownership model. It's not all upside. Let's dig into the risks and rewards. Strengths: lower investment minimums, greater diversification, access to bigger deals, and automated management. Opportunities: tech adoption is opening up new markets and property types, inviting a broader range of investors. Weaknesses: some markets may still be tough to exit. There's always the risk a platform could falter, and property maintenance can hit yields. Threats: things like market volatility and changing regulations can also impact returns or limit how platforms operate. The key? Stay informed, diversify, scrutinize your platforms, and understand your agreements. To succeed here, don't just jump in blind. Top strategies include spreading your bets across a range of properties, thoroughly vetting the platforms and legal terms, and keeping a regular eye on performance. Many platforms allow you to leverage secondary markets to manage risk as well. The informed investor is the one who wins. What's next for real estate crowdfunding? Markets are expanding to new regions and property types, and platforms are attracting more diverse investors. Technology is advancing. Think smarter analytics and even blockchain for secure property records. Regulators are adapting too, enabling more cross-border investments and innovative compliance. AI and automation are making everything smoother, from asset matching to ongoing management. In short, the whole real estate game is becoming more open and tech-driven. To wrap up, real estate crowdfunding is breaking down traditional barriers and bringing more people into the world of property investment. With enhanced efficiency, transparency, and scale, these new methods offer exciting ways to build a diversified investment portfolio. The future looks bright for those willing to embrace this new approach. Thanks so much for watching. If you enjoyed this video, don't forget to hit that like button, subscribe to the channel, and tap the notification bell so you never miss a new upload. Your support really helps the channel grow. See you in the next one.